morning, good afternoon, good evening, wherever you are watching from. This is another accounting section with maa'm Tutu. This class is in response to one of the students, Nosipo, who asked for question 3, Gauteng question 3, June exam 2023. Gauteng question 3, June exam 2023. And we are taking question 3 from that. So the first question there, 3.1, it's on concept. It says, indicate whether the following statements are true or false. Only true or false next to the question, 3.1.1 to 3.1.3 in the answer book. So 3.1.1 says, cost of sales is determined at the point of sale in the perpetual inventory system. Cost of sales is determined at the point of sales in the perpetual inventory system. That statement is true. That statement is true. Once we sell, we calculate the cost of sale using the perpetual inventory system. Why? Because in the perpetual inventory system, we monitor the movement of our stock at any point of movement. So that statement is very true. The next one says 3.1.2, in the periodic inventory system, carriage on purchases is recorded as an asset. In the periodic inventory system, carriage on purchases is recorded as an asset. That statement is false. That statement is false. That statement is false. The reason being that in the periodic inventory system, carriage on purchases is regarded as an expense on purchase. It is regarded as an expense and not an asset. It is in the perpetual inventory system that we regard carriage as part of the what? Trading stock, which will be an asset. 3.1.3. A perpetual inventory system is very expensive. A perpetual inventory system is a very expensive system to have in place. I read again. A perpetual inventory system is a very expensive system to have in place. That statement is true. It is very expensive to have a perpetual inventory system. It requires a machine, it requires a scanner, and what have you. So, to the next question, 3.2, Leather City. 3.2, Leather City. Leather City is a company that sells two different types of leather, couches and pillow, among other things. The financial year ends on 30 March 2023. The business uses the periodic inventory system. Stock is valued as follows. For couches, they use specific identification method. And for the pillow, we use the weighted average method. Now, required. We are working now on couches. Calculate the following for the financial year ended 31st March 2023. Calculate the following for the financial year ended 31st March 2023. The first one is the value of the closing stock. Next, we have cost of sales. And the next, we have the gross profit. So we are dealing with couches. We are dealing with couches. And remember, couches, we use SIM. Specific identification method. With couches, we use specific identification method. So the first thing we want to calculate now is the value of closing stock. Now remember, we said with specific identification method, we value stock specifically. Each stock will have their own what? Their own cost. So each of the stock will have their specific cost, and that is specific identification method. Now, looking at our couches, we have two range of couches. This business has two range of couches. We have the basic, and then we have the elite. We have the basic couch, and then we have the elite. So we are going to value this stock individually. Now, the first thing I advise is that you study your table. Study your table. Know what your table entails. If you check the table for the couches, we have stock balance on 1st April 2022. Those are the opening balances. Our financial year is ending in March 2023. If our financial year is ending in March, then it started in April. So it means these are our opening balances. We have for basic, we have cost including carriage, which is 36 units, and the total amount is given as 540,000. We have for elite, stock including carriage, cost including carriage, it's 23,000. Stock including carriage is 23,000, and we have 18 units with a total amount of 414,000, and then the total opening stock for this business stands at 54 units, which is 954,000. Then we have the total purchases. Total purchases of couches for the year ended 2023. The costs include the carriage on purchases. We have for basic, we bought in 351 units, and the purchase price per unit is 14,150, and then the carriage per unit is 850. So we have the total of 5,265,000. Then for the elites, we have 191. The purchase price per unit is 22,150. The carriage is also 850. The total purchase price is 4,393,000. The total purchases for couches stands at 542 units, and the total amount there is 9 million thousand. Now we have a note. They said return to suppliers. There were no return for basic range, meaning we do not have to return any of the basic range back to our suppliers. But for elites, we return 7 couches. We are returned back to the supplier. Now, carriage on purchases. The company uses speedy transport for delivery of goods to the shop. The business does not get refund on any returns to supplier. The business do not get refund for any returns to supplier. So it means when you return back goods to supplier, we don't get refund on carriage. It means the supplier will only refund you the cost price of the goods that were returned. Now, display in shop. The owner uses one set of the elite range to display for customers to see. The display in the shop, you can decide to make it part of your closing stock, or you can decide to say this display is not sellable again, and then you take it out of your closing stock. Whichever way, you will still receive your mark. Now, let's calculate the value of closing stock for basic. For basic, let's calculate the value of closing stock. For basic now, another thing you should check is your unit price. Your unit price for each of this stock. The unit price for each of the stock that were purchased. It is very possible that I buy the same model, the same type of stock, but at different prices. It is very, very important for you to check your unit price as per date. You find out that the unit price we have for the opening stock is 15,000, including carriage. Now, if you go to the purchases, you find out that they gave us the purchase price per stock without carriage. But when you add the carriage to the purchase price per stock, it still gives you 15,000, which is the same price for the opening stock. Some question, it might differ. If it's not the same amount, then you need to charge each stock specifically. Right. Now, let's check for basic. Basic here, our opening stock, we have 36 stock at the beginning of the year. And then we bought how many stock more? We bought 351 stock. So, 36 stock plus 351 stock are the stock available for sales. I repeat, 36 stock of basic, which is the opening stock, plus 351 stock are the stock available for sale. Now, how much did we now sell? How many stock did we now sell out of this stock? We sold 372 units. We sold 372 units. So it means that the number of our closing stock will be 15 units. Our closing stock will be 15 units. So I will say 15 units multiplied by the value of each stock, including carriage. The value, the cost price of each stock, including carriage, which is 15,000 rand. And that would give me a total of 225,000 rand. So the value of our basic, is 225,000 rand. 225,000 rand. So let us now do the one for Elite. Let's calculate the value of the closing stock for Elite. The value of the closing stock for Elite. With Elite, we have how many stock at the beginning? We had 18. We have 18 units as our opening balance, and then we bought 191 units more. We bought 191 units more. We returned 7 units back to the supplier. We returned 7 units back to the supplier, and then we sold 179 units. So how many units do we have left with the Elite? We have 23 units left. So 23 units multiplied by 23,000 will give me a total of 529,000. That is for Elite. 529,000 for Elite. So, or you can also, now in this case, I have counted the display units as part of my stock. I have counted the display unit as part of the stock that is still sellable. But some of us may decide to say the display unit is already dirty. We may not be able to sell it again. If you consider that the display unit will no longer be sellable, then you are now going to take it out from the closing stock. You are now going to take it out of your closing stock. Initially, we got a closing stock of 23. But if I say the display unit is no longer sellable, which is also reasonable, I can say 23 minus one set of the displayed unit, which will give me 22 units. Then I say 22 units multiplied by 23,000. 22 units multiplied by 23,000, that will give me 506,000. Whichever way you go about this, you will still get your marks. We should calculate the cost of sale. Remember, calculating the cost of sales, this business uses periodic inventory system. The business uses periodic inventory system. It means we consider our opening stock, we plus with our purchases, and then we minus our returns and minus our closing stock. We minus our closing stock. So let us consider our cost of sales. Cost of sales. We are using periodic system. We are using periodic system. Right. Now, our opening stock for these couches, the total of our opening stock is 954,000. We have 954,000 as our opening stock. Our purchases, including carriage, our total purchases, including carriage, stands at 9,658,000. 9,658,000. Now we need to take out our returns. Remember, the company, our suppliers, are not going to refund the amount of carriage. They are not going to refund the amount of carriage. So our returns will stand at 7 times the cost price for Elite without carriage, which is 22,150. And then finally, we minus our closing stock. If you add your closing stock together, you are going to get 754,000. So what will be the value of our cost of sales? The value of our cost of sales will be 9,702,950. 9,702,950. Another way of doing this, you might not be comfortable with this way. Another way of calculating your cost of sales will be to take the amount, the number of units sold multiplied by the cost price, including carriage. The number of units sold multiplied by cost price, including carriage. The number of units sold multiplied by cost price, including carriage. And then you must remember to add back the carriage of the 7 goods that were returned back to the supplier. Let's try that. How many units were sold from the basic? From basic, we sold 372 units. We multiply that amount by 15,000. That is for basic. For Elite, we sold 179 units, and we multiply that by 23,000. Now remember, we are supposed to add the cost of carriage of those 7 stock that we returned back to our supplier, because whether we like it or not, we already incurred that cost. We already incurred that cost, and that cost has to be valued on our trading stock. The cost of carriage has to be valued on our trading stock. So our cost of sales must take share of this what? Of this stock that was what? That was returned. So what do I now do? I will now add back the cost of carriage, which is 7 times 850. So if I do this calculation, I'm going to get 5,580,000. For Elite is going to be 4,117,000. 117,000. And then for the carriage is going to be 7 times 850, which gives me 5,950. So if I add the total value here will be 5,950 plus 4,117,000 plus 5,580,000, and that still give me the total of 9,702,950. So whichever way you decide to go, you will still get the same answer. So the next question here, the next question says we should calculate the gross profit. The gross profit made from the sale of couches. The gross profit made from the sale of couches. Remember, your gross profit is your sales minus cost of sales. Your sales minus cost of sales. So let's look at the amount of our sales. The total amount of our sales is 15,124,600 minus the cost of sales, which is 9,702,950, and that should give you the total. That should give you a total amount of 5,427,600. Our gross profit stands at 5,427,600, and that is the gross profit for couches. That is me for now. We will continue in the part B of this class, and we shall be looking at 3.2.2 up to 3.2.5. See you in part B.